Howdy, everybody. Welcome to Liberty Call for Wednesday, April 16th, 2025. Hope you're having a fantastical day out there in the interwebs. Hope you got your taxes done yesterday or filed an extension, because you wouldn't want the government to starve, because all those employees need to eat. All right. Well, markets are sliding again as the U.S.-China trade spat deepens. NVIDIA just took a $5.5 billion punch thanks to new export bans, sending tech stocks into retreat. Powell's playing wait and see on rates, but even he admits tariffs could fuel inflation. Meanwhile, gold's charging past 3,300 as investors run for cover. So before we break all the news down, I need some help from you. If you give me some thumbs up, like, share, subscribe, follow, and press the notification bell. All right, well, let's get into the markets. There we go. All right, Dow Jones down 1.73%, 699 points. Closed at 39,669. S&P 500 down 2.23%, 120 points. Closed at 5276. NASDAQ down 3.07%, 516 points. Closed at 16,307. The VIX up 8.53% today. It's at 3269. Canada up 0.16. Brazil down 0.72%, and Mexico up 0.71%. In Europe, Germany up 0.27, the UK up 0.32, France down 0.07, Netherlands down 0.42, Spain up 0.49, Italy up 0.62, Switzerland down 0.49, and Portugal up 0.59. Russian exchange is green today. MOEX up 2.02%, RTSI up 1 2/3. And the overnight markets, the Nikkei in Japan was down 1.01%, Australia down 0.04, New Zealand down 0.09. In China, the Shanghai up 0.26, the Shenzhen component down 0.85, China A50 up 0.48, DJ Shanghai up 0.09, Hang Seng down 1.91%, and the Taiwan weighted up 1.77. All right. Those are the markets. Let's go ahead and there we are. Get to our market recap. S&P 500 slumps as hawkish Powell speech deepens tech-led loss. All righty. The S&P 500 fell sharply Wednesday, dragged lower by a steep sell-off in tech, especially NVIDIA, and hawkish comments from Federal Reserve Chair Jerome Powell that quashed near-term hopes for rate cuts. Powell emphasized that the Fed's main focus remains anchored to inflation expectations, warning that the central bank won't act hastily just to buffer the economy against the inflationary impact of tariffs. We must ensure a one-time jump in prices doesn't become an ongoing problem, end quote, Powell said. His remarks stood in contrast to Fed Governor Christopher Waller, who earlier in the week indicated support for cutting rates sooner if tariffs threaten significant economic slowdown, even at the risk of temporary inflation. Again, these people at the Fed will inflate the economy, every time something bad happens, just so that they can look like heroes. Let's see. Moving on, NVIDIA stock plunged more than 8% after warning of a $5.5 billion hit from U.S. export restrictions on its H20 AI chip to China. AMD followed with a forecasted $8 million write-down, sparking a broader sell-off in chip and AI stocks. TSMC, Intel, Broadcom, and ASML also declined amid deepening trade tensions. Outside tech, Travelers managed a 1% gain despite a 60% plunge in Q1 profits tied to over $2 billion in wildfire-related losses. United Airlines was flat, citing steady forward bookings despite tariff worries. Hertz soared 16% after Pershing Square disclosed a new stake. Retail sales surprised to the upside, rising 1.4% in March, fueled by strong auto sales as consumers rush to purchase vehicles before tariffs take effect. The upside beat February's 0.2% gain and added to the case for inflation vigilance from the Fed. Google parent Alphabet slipped 1% after a UK class action lawsuit seeking over $6.6 billion in damages for alleged abuse of its dominance in online search. All right, so that's that. Interesting. Let's get to some data here. The March retail sales report from First Trust. Mr. Nate Gursey put this together. Retail sales surged 1.4% in March, the largest monthly jump in over 2 years, as consumers rushed to make purchases ahead of expected tariff hikes. Auto sales led the charge, soaring 5.3%, reflecting concern that vehicle prices will rise under new import duties. Even excluding autos, retail sales rose 0.5%, with upper revisions to previous months boosting the overall picture. Building materials, another category facing potential tariff exposure, saw a 3.3% increase, its strongest monthly gain in 4 years. In total, 11 of 13 major categories posted gains. The exceptions were gas stations, down 2.5%, and furniture stores, down 0.7%. Core retail sales, excluding autos, gas, and building materials, rose 0.6% in March and 1.3% when including revisions. However, core sales growth has slowed in 2025, rising at just a 3% annualized rate in Q1, even with the March front running bump. Notably, bar and restaurant spending, a key proxy for services in the retail report, rose 1.8%, its best showing since October of 22. Retail sales are up 4.6% year over year, but inflation-adjusted real sales have grown only at 2.1% and remain below their 2021 peak. Consumers are paying more but taking home less. Looking ahead, sales are expected to remain volatile amid ongoing tariff uncertainty. Import prices dipped 0.1% in March, while export prices were flat year over year. Import prices are up 0.9%, and exports are up 2.4%. All right. Some interesting intel in there. Let's get to our next report here. Also from First Trust, the March Industrial Production and Capacity Utilization Report from Mr. Bryce Gill. Let's see what he had to say. Industrial production declined 0.3% in March, but the drop was entirely due to a sharp 5.8% decline in utilities output, driven by unseasonably warm weather lowering heating demand. Excluding utilities, factory activity remained strong, with manufacturing rising 0.3%, its fifth straight monthly gain. Auto production rose 1.2%, reflecting steady demand despite tariffs already in place on goods from Canada, Mexico, and other regions. Given the auto industry's ties to Mexico, future trade negotiations could increase volatility in this sector. Core non-auto manufacturing also rose 0.3%, supported by strength in high-tech equipment production, which gained 0.3% in March and is up 11.3% year over year, the fastest growth among all categories. This trend reflects ongoing AI investment and reshoring of semiconductor manufacturing. The mining sector posted a 0.6% increase thanks to accelerated activity in metal and mineral extraction and new well drilling, which offset a temporary decline in oil and gas output. Gas and oil production remains up 2.4% over the past year. Looking ahead, the Trump administration's pro-drilling stance is expected to support further mining growth. Meanwhile, the Empire State Manufacturing Index improved to 8.1% in April from a negative 20, suggesting a rebound in New York factory sentiment. All right, so not everything's terrible out there, folks. I mean, if you watch the news or you're on social media, you get senators like mine here in Colorado saying, "Oh, Trump is destroying the economy," blah blah blah. It's like, well, first of all, these are things that the federal government shouldn't be involved in the first place, or wasting all that money in the Middle East over the last 20 years, all the trillions of dollars there. We could have used that for healthcare. For our own people. I mean, if we're going to waste the money, I'd rather it go to people here in America than, line in the pockets of defense contractors and, blowing people into smithereens over on the other side of the planet. But that's just my anti-war opinion on things. All right. Last up, article from Zero Hedge, depression narrative bust. Atlanta Fed adjusts away GDP plunge forecast. The Atlanta Fed shocked markets last month when its GDP Now model slashed U.S. Q1 GDP estimates to nearly negative 4%, triggering widespread panic among establishment pundits who blame President Trump's economic policies for an impending economic collapse. However, the dramatic forecast missed a crucial detail. The plunge in GDP was largely due to a spike in gold imports. As Goldman Sachs economist Manuel Abacasis clarified, the recent trade deficit widening used as an input for GDP calculations was driven heavily by a surge in physical gold imports. Since imports are subtracted from GDP, this spike falsely signaled an economic contraction. Once the data was properly adjusted, the Atlanta Fed quietly revised its Q1 GDP forecast to a marginal negative 0.1% decline, essentially erasing fears of a Great Depression-style slowdown for now. The initial panic now appears to be more narrative manipulation than reality, with critics accusing media and political figures of using flawed data to attack Trump's tariffs and trade agenda. No, they would never do that. The media? The Democrats? No, they're too honest. I know, I can't even say that with a straight face. This episode highlights how skewed data inputs, especially from anomalous events like record gold demand, can be weaponized to misrepresent economic conditions, sowing unnecessary fear and bolstering political agendas. As the panic fades, the real story may be about narrative control, not economic collapse. And again, with all the noise, going around, tariffs and cutting jobs here domestically, and whatever things that the politicians are freaking out about at any given time. I don't watch Fox or CNN. So I don't know I don't watch any of this stuff. I only get the tidbits from the people that I listen to who are commenting on those things. And now sometimes I will go back and actually listen to like a full video or something like where people said Trump tried to drink bleach. He didn't. Idiots, morons. I swear. Because I was sitting here the day he talked about it. I remember watching the press conference. It had to do with some sort of disinfecting lights, like a UV or something. You put it down in your throat or up in your sinuses. It's supposed to kill all the bacteria and viruses and everything. So it's kind of like what they do when when the food's going down the conveyor belts and they put the UV light on it. It's supposed to kill 99.9% of things that will hurt you. So it's the same idea, but of course the morons in the media are like, oh, he said drink bleach. He didn't. I was watching it. I mean, please, folks. It's like the fine people hoax. It's just these people take a little bitty sliver of a conversation or a speech and they blow it up out of proportion. So anyways. And again, I don't even like Trump. I mean, I like him more now than in 2015 when he came down the gold elevator. But, I'd much rather have a libertarian or an anarchist running things than, these bought and paid for politicians. So anyways. All right. Well, that's everything that I wanted to vent about today. So if anyone needs anything from me, please go to, wait for it. Doodle-doo-doo-doo. Oh, wait, where is it? Oh, I hit the wrong button. Here it is. Doodle-doo-doo-doo. There it is. DSAFinancialGroup.com. I hit the end stream button. That would have been unfortunate. So, all righty. Well, that's everything that I had to ramble on about today. So if anyone needs anything from me, go to said website. Otherwise, I hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.